Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. Just get my stuff together here. I titled today, Markets Ready for Next Leg Up with a question mark. For those who don't know me, my email address is hgsidoc@gmail.com, and I welcome comments, pro and con, alternative thoughts to the market. If you're watching this on YouTube, please make sure you go to the lower right-hand corner where you can change the gear and change your resolution. I do this in 4K, and you want to watch in the highest resolution you can, or you will find it very bleary. Under remarks, please feel free to comment, and with a thumbs up or thumbs down, the more thumbs up I get, the more likely I can get YouTube to actually dish this up to people that don't already follow me. I do this for fun and try to help folks. I don't charge for anything. This is for educational purposes only. Anything I recommend is purely education and not investment advice. I am a doctor, not a broker. I am independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I've done this slide 1,000 times, so let me just say that I've learned from a lot of smart people. Here's Ian Woodward up here, someone I referred to a lot. I found the best way to get successful was to get educated, to learn from smart people. The employees of my trading quote business are software tools, and I tried to become my own guru. And as Ian Woodward would say in an accent that I won't even try and reproduce, the goal here is not for me to be anybody's guru, but to help give you some ideas that can help you along with becoming your own guru. I own a lot of software tools, and I guess the key thing here is I hide my desktop so you can't see how much money I've wasted. If you check me during the day, you'll see me with TradeStation, Thinkorswim on with multiple indicators, whether John Person, Sagar's Q, Dr. K's tools. I have HGSI typically open, which is, I think, the world's best tool for scanning the market, fastest for sure, and most customizable. And then EdgeRater automates a lot of the things that I do. A couple weeks ago, I introduced you to the new divergence tool from Dr. K. And as always, whenever I introduce something to you, I don't get paid anything. And if you buy it, you get opportunities for a discount, and there was a discount there. So at the end of the day, I am an unpaid volunteer, and this is just education. No affiliation with me and this website, but it's one of my favorite tools, highgrowstock.com. Free 30-day trial under investing strategies. You'll see many videos by myself, Ron Brown, and others. And one of these days, I'm going to do this, and you're going to go to the website, and it's going to look differently because I know there's a big redo of the website coming. Stock patterns are cyclical. We basically have truncated the top of this and have been oscillating. It feels like the market's rolling over. We go to the next leg up. That's been going on for a long time. What's made it even more difficult is the S&P and the Dow feel like they're in a new greed stage 2 markup, yet at times the NASDAQ, especially the large cap NASDAQ, has felt like it's selling off. So it's not all working in unison, which makes our jobs as traders and investors that much more difficult. So based upon where I feel at any given time, I'm going to match up my impression of the market with the various trading approaches. I can tell you right now, I'm still, if you listened last week, I said the market was vulnerable and ended up having a decent week, but intra-week, it was a tough week for a lot of people. And the only reason why I had a decent week is because I went into the market 10,000 shares of triple TQQQ short. And with my Amazon and Apple positions fully hedged. I've started to wean off hedges, Amazon, I'm afraid to. I don't like how it's behaving, but I will probably evaluate that even before the market opens on Monday. Hedges, for me, allow me to maintain a lot of my long positions and reduce my risk to the downside. The downside of hedges, or the problem with hedges, is it also reduces my upside gains. So I don't want to keep them on any longer than necessary. You can see the strength in the market Friday if you just look at this, and the real estate's more than I think that's in the SPDR ETF. But you can see each of these SPDR ETF sectors and the components. Look at energy. Everything was green on Friday. Materials mostly green, financials mostly green, industrials mostly green, mixed on staples, positive on technology, positive on discretionary, even positive leaning on utilities, healthcare, communications. I'm sure you made money on Friday, but how did your week go? The week was much tougher for me, although my hedges got me positive. Let's take a look at the major market, because I do think we can always learn from the markets. So when I stand back and I look at this, I see a lot of different things here. I see that the S&P has just been in a steady uptrend, and this balloon here over Friday says it set a new high on Friday. Also a new closing high on Friday. May have set the high on Thursday, but a new closing high on Friday, I believe. NASDAQ? No, NASDAQ's really gone sideways over the last couple of months. Up and down, up and down. The Dow, my God, what a straight shot. All-time high on Friday. You look at the Russell, it looks more like the NASDAQ going sideways. The VIX is down in the 18 level and weak with a new person sell signal, and the dollar continues to break down. So that tells me a lot of information. This is a daily chart. Of course, during the day, I might look at weekly charts or intraday charts. Here is showing that it was the high and new closing high in the S&P. What a great run up. And living up here at this Fibonacci retracement, 161%. An area where I thought we might have seen some resistance. I wonder if we can get up to this fib line, which is the 172%. It'd be interesting to see, 178% rather. Still not much of a move up, but it did close at an all-time high. If I look at the NASDAQ, you could see it pull back to the 50, which held. It's really impressive on the expected move charts, which I'll show you. The Dow, all-time high, all-time closing high. Russell, again, sideways since mid-February. You can see how much the VIX has fallen. It has not quite taken out its April lows, but it certainly looks like it's heading there. And the dollar, which had threatened some strength, isn't following through. And you can see the dollar dropping here. Obviously, that has impact on a lot of things. Probably wasn't helped by the miss unemployment. Some people might wonder why the markets did so well despite the unemployment miss. And I think it's simple. I think it's just simply the biggest threat, as many people would say to the market right now, is the Fed reducing QE or raising rates or both, and think of the taper tantrum in the past. And when we flubbed so bad unemployment, I guess it made some people want to believe the Fed that none of that is anywhere close. Now, on the weekly charts, nothing new to talk about that it wasn't already covered on the daily charts, but let's look at the expected move chart very quickly. Let's look at that using the actual chart here. So remember what I said before, the expected move is defined by the straddle pricing, and it's the market makers on the options determining, frankly, what their risk is. and they know that I think it's 2 standard deviations of time. It will stay within the upper and lower level. I know that I often will make major changes in my portfolio when it bounces off of the extreme. S&P 500, as I said, really mostly flat, really going back to here, but closed a little bit up on Friday, enough to set an all-time high. Well, a little bit up, 32 points. So let's open this up here, look at these a little bit easier. So it really did nothing until Friday. And notice next week we're starting to get less volatility, perhaps because some of the major earnings are out. If I look at the NASDAQ futures and look at the expected move, notice how Monday was weak, Tuesday was really weak, but you had a reversal. So this should have had you thinking about covering, had me thinking about covering my triple Q short. Wednesday failed again. I'm still holding my short. And then Thursday, as it came back up here, I took it off, and I went long, added to some positions, and you could see Friday it moved up. So getting back above the lower limit here enabled me to switch a little bit of my hedges off and go further long. Now look at the Dow here. Now I believe this is a Dr. K, let's see, divergence. So we've got some bearish divergence. Now you don't have to, at Dr. K, actually even plot the RSI. It's all in here. So you've got some bearish divergence working on the Dow. No surprise, it's had almost a straight move. And look what it did this week. It broke through. Now, do I short because it hit the bottom? I don't short because it hit the bottom. I certainly would have shorted or considered shorting the Dow if it broke below this line. But it finished at the highs of the day, really getting extended, and with the divergence probably increasing its risk. That said, extended markets like to get more extended. Look at the Russell, just like the NASDAQ, on Thursday actually crossed below the red line and bounced. And when it opened up on Friday, I closed my TZA, which I had as well. So these things really help me on a moment-to-moment of deciding what to do with my positions. Now, the VIX, it's hard to make money on the VIX these days. It hasn't popped. And you can see this week it went sideways for, gosh, it must be 2 weeks here, or at least 2 weeks, and broke down and closed at the lower limit on Friday. To get this line like this just must have been, so here was the Friday close, the prior week, Monday, Tuesday, Wednesday, Thursday, Friday. It closed at the same level it opened. That's why this is such a long bar. I think this adds to my power of trading. Oh yeah, and look at the dollar, how it actually broke down so hard below. Sometimes when it breaks below, it will go much further. Rates, I called it sideways. I think they were down in Nebel, but now you've had a couple weeks up, down. So it's starting to feel like that big inertia to the upside on both 10, 30, and other yields or other bonds seems to have slowed down. AD lines, now the small stocks are joining the party, new highs. Large caps, new highs, AD lines, and stocks. Interestingly, if you look at the NASDAQ, hard to see here, but the NASDAQ AD line is starting to suffer a little bit. So not as strong as the others, although it did okay this past week, especially Friday. And if one looks at the NYSE, again, new highs, and you can see the Qs here actually rolling over while most of the other indexes are going up and the bonds going sideways. Why? Because interest rates kind of went sideways. Now, I said breadth isn't overbought, and clearly you can see stocks above the 200, upper part of the range, but coming down as this spider gets higher and higher, and stocks above the 40 didn't move much this week. And you can see I'm going back here a long time and looking at the impact of this. Now, another thing I like to look at is stocks in the T2121, which I haven't looked at yet, but I know Sager is looking at working this into his great tools. Maybe he's got it done. I just downloaded the new set, and I'll look at them on Sunday when I have some time. You can see we closed just, not just, underneath the bar of reversal, and we're approaching overbought here. The daily McClellan, I'm still nervous when I see new highs on the S&P 500, and I can't break this descending downtrend on the oscillator. In fact, you've got the same thing here on the weekly on the oscillating and summation index. Current buckets. Well, I wish my portfolio felt as extended as the buckets look like. Look, I've had a great year. I mean, I was up a lot more. I'm still up in the 40% in the seven-figure return, so I've got no complaints. And oh yeah, it's only May, so I have time for it to get back up to 100% or more. Probably won't approach what I did last year, but 71% of the stocks are in the S&P 1500 above the midline of their Bollinger Bands. That's very bullish. And 20% of the stocks are above their band. So we're starting to get a little ripe here. And so, what we've been seeing is not crashes in the market from this of late, but kind of rotations. And, is this a week where coming up and maybe some of the technology stocks that have been beaten down rotate into favor while some of the extended stocks, miners, energy, financials might pull back some or go sideways? We'll see. A little bit of excitement on Thursday when we almost had a Hindenburg Omen pop up in the NASDAQ. And it was the first time in ages when we got above 2% on the 52-week lows. Now the NYSE is nowhere close on the new lows. Until we start seeing new lows, we're not going to see Hindenburg Omens. And for those that haven't been here before, this was something that's, I guess, old folklore that Ian certainly, he mesmerized me with it as a indicator of a likely market pullback. And there hasn't been a major pullback in 50 years or more without the Hindenburg Omen firing. Market tone, better, but still not great. We had some kahunas hit on Thursday. Mixed. If I look at this chart, I put a question mark about a tough week for growth. And the reason why I have a question mark is in HGSI and in Edge Rater, we have something called ERG. And ERG is kind of like, well, it's not kind of. To me, it's a measurement of growth. It's EPS rank plus relative strength rank plus group rank. And high growth stocks typically are high ERG stocks. So, and if you look down here, you see the number of stocks in every group. So I ignore the head and the tail. So I would be looking kind of at the middle here. And this actually tells me that high ERG stocks did well. I'm surprised, and I'll talk about why later. Now, if I look at EPS rank, high EPS rank did not give you a better return. If I look at relative strength rank, except for at the very top of the spectrum, which would be probably impacted here, relative strength was good, as was group rank. And the ones that led the prior week did well this week as well. Now, why did I say a tough week for growth? Because when I come here and I look at my portfolio, now the problem with this is it's not correct because it looks at everything long and my hedges were big. I mean, I had a significant hedge on the TQQQ, so it mitigated my losses. But we'll ignore that for a second. Look at the S&P 500 was up a little bit over 1% on the week. The MarketSmith 250, interestingly, a broad-based number of stocks, was up 1.8 as well. And if you come down here, you find the IBD 50 was down 1%. So the narrow high-growth stocks lagged, but the broader MarketSmith actually did okay. I think it was a week with WEAK, weak EEK for growth. Sector strength, well, we went out of red, so that's improving. Now, interestingly, if you look, this is from Sagar Q Tools, Q Edge. and it's looking at sectors, industry groups, and stocks, and it's looking at 1 day, 2 day, 5 day, 10 day, and 1 month. And you could see as we move towards the left, the shorter term has gotten much stronger. In fact, all the sectors were positive the last 2 days. If you look at industry groups, about 90% are positive. And if you look at stocks, 75 to 80% are positive. So that's pretty bullish. Down here is a intraday read on the buckets, similar to what we saw in EdgeRater, and notice 21% of the stocks. So you could see the prior day was only 8.8. So this is, to me, a bit of a concern. But like I said earlier, it doesn't mean we can't just go sideways. If I looked at sector performance, I could see on the week, 9 positives, 2 negatives. What was negative? Information technology and real estate. What was the big leader on the week? Well, it looks to me like it's energy, materials, and I bet financials didn't do so bad in third place. Actually, third place was industrials, financials fourth. If I look at Friday, we see energy leading, and notice over the past year, except for stubbing its toe about 2 months ago, energy is the leader. Did you know that? Do you have a lot of oil exploration, oil services stocks, maybe in MLPs? I bet a lot of you don't. Consumer discretionary has been a leader, and is it coming back? And healthcare has just been destroyed, and at least we had 1 day of energy. Now, in the Sager tool, and I'll spend the rest of today mostly with HGSI, I can highlight the top 3 groups, top 1 group, top 2 group, and then it shows me what are the industry groups, and then I've ranked them by strength: oil, gas drilling, oil, gas equipment, education services, coal, auto parts, oil, gas exploration, hotels, healthcare services, department stores, housewares, casinos, home building, healthcare tech, and apparel. Those were the ones that were the top industry groups in these top sectors. And you could see oil, gas, and drilling being number 147 was the top within the group. And then I could pull up a list of all the stocks, and then I could find the undervalued and high growth and good earning stocks, which are listed here. We may or may not come back to that as we go forward. Canaries in the coal mine, I thought they were going to make a run, and all they did was go sideways, and right now they have indecision at the 50. I like to see the Canaries lead. Know your news and earnings. You know, news matters. Probably matters more now as the Fed is trying to understand growth, inflation. And again, as much as they say they're not going to do anything, I still worry that at some point they're going to do something. Wednesday we got CPI and federal budget. Thursday we got initial claims, continuing claims, PPI, and then retail sales, capacity, sentiment, and inventories, all of which will be interesting. Many of them are backwards looking into March and April. Sentiment is current, as is jobless claims. The other thing is, now I went through this earlier, and I don't think I've got a lot of stocks there. I've owned a bunch in the past, but you can see a list of what has earnings this week, at least the major players. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I get a lot of questions of where I get this. Simple. Go to earningswhispers.com. They publish it every weekend. So thoughts. S&P and Dow set intraday and closing record highs on Friday as investors look past and it wasn't a small miss. Some people put over 1 to 2 million. I think it was 250,000. So the markets did well despite that, and the NASDAQ and Russell outperformed. Now I hope, well, I won't say anything. Kathy Wood's been facing a lot of heat. She got slammed this week as innovation was down 9%, and Genomic Revolution was down 9%. The rest of hers, NASDAQ 100, IBD 50, were all down 1% or more. Now, maybe it's not fair to pick on Kathy Wood. She's had great returns over the longer period of time, and she's married to investing themes. And if genomics are doing horrible, I'm not sure how she's not going to do horrible. Strong close on Friday might give some hope to growth investors. Look at the year to date. Russell leading, Dow Jones second, S&P, and these are all about the same. Then the NASDAQ's half. So as I said earlier, the hedges helped me a lot this week. I've kept my Amazon 3,500 puts. I had a large, I'll tell you, I had $110 triple Q short. I took profits at 97. That's $12.5, $13, and I had 10,000 of them. That made up a lot for the week and helped me go positive. And Amazon, I don't even want to talk about Amazon. Thank God I had my puts. I did start weaning off my hedges because, as I said before, if you don't wean them, then you just don't go up when the market goes up, or don't go up as much. I'm still heavy with material and energy stocks. And as I did my top down and my bottoms up review this week, it was hard not to be somewhat bullish. Yes, NASDAQ and growth have a long ways to catch up, but there was a huge number of stocks that made my bullish list. Problem is, a lot of them have already moved. So finding stocks this late in the market that are just setting up and ready to break out means I'm finding laggards, and maybe that should be a concern. My guess is we have another leg up, but we shall see. Trade the market you get, not what I, on half asleep at Saturday near midnight, think we're going to get, because all my thoughts change when I wake up Sunday morning and look at the futures, or Monday morning rather. All right, let's take a look at some of the things I'm looking at. And let's very quickly pull up TradeStation before it kicks out at me. I'm missing one. SPY, Qs, where's my Russell? Let me see something. There it is. If you look at the spider ETFs, or not the spider ETFs, the major market ETFs, and this is Friday, the Qs have pulled down to major support here. You got support underneath. This here would be more support, and it bounced. I don't like how it finished with a doji, but you had some definite evidence that you might, perhaps we're going to see a move up this week. So you had a reversal off of support Thursday and Friday. If you look at the spiders, you had a breakout, new highs, getting frothy. We're going to look at how frothy in a second. The diamonds taking out these lines here, which are boundaries of where you expect it to move. And then if you want to be bullish, look at the Russell, a reversal, stretch, and a new person buy signal. So the Russell and the NASDAQ both look like they're more likely to run, because to me the spiders and the diamonds are getting frothy. Now let's go into the market force and divergence, and let's just look at how frothy they are. So let's look at the E-minis. One, buy signal, daily, weekly, and monthly. Check, bullish. Green bar, these are Alexander Elder impulse indicator. Green, I could be long or hold, I shouldn't short. Red, I should short or hold, I shouldn't enter new longs. I'm green, green, and green. Check, bullish. Number three, I'm at the upper boundary. Yeah, that's an elder boundary. It's concerning, but you know what? Look how long it went up this boundary. So I'm okay with that. The next thing I look at are these red dots. When you see them, these are divergences, and you expect it to resolve to the downside. It did. They're gone, but I still have them on the weekly. I come down here and I look at the high jump. It's 85. It can get above 95 in 1 or 2 days. But right now, it's not at mandatory. I don't mean mandatory because I tell the market what to do, but almost every time I see it, I get a reversal there. Now, as I've been saying, the leader has been the Dow. So let's look at the Dow. Buy, it's got the red dot there. It's got the red dots there, again above the envelope. And notice it's at 91% of the high jump. What that means is it's more extended from its major moving averages. Well, it's at the 91st or 92nd percentile. Now, this is an area where you start to think about reversal. I mentioned before that it was getting stretched. That's how I measure stretched. It can get to be close to 100, but when it starts to get close to 95, I start thinking about taking profits. It's close. The NASDAQ, it's in a sell signal. That's different than the others. It did turn blue, which is great. You can see the high jump is not an issue. It's at 28. On weekly and monthly, it's still bullish looking. And lastly, the Russell triggered a buy signal on Friday in green at 37%. So, I mean, I think there's a theme here that some of the large caps, the S&P and the Dow, might need a breather. So I opened up Major Markets Plus. I put the top-down analysis on it, and I'm going to rank by raw combo. And when I see transports, gold miners up top, mid caps, NYSE, gold, Dow Jones Industrial, probably, although it was a good day on Friday for some growth, wasn't a great week because this is looking out over a longer period of time. Here's the S&P 500. Notice the weekly bongo, which is my long-term trend indicator, is green. Had a mobile breakout from a squeeze, a new person buy signal, and a kahuna. It's going up. That looks like another leg up. At some point, it's going to be one leg too far. I'm going to watch my high jump. I don't know how much room this thing has to go, but you know, I can't see the future. I can just see what I see today. And that's a breakout. We'll see if it holds or if it becomes a false breakout. If I look at the Dow Jones Industrial Average, broke out as well, even stronger looking. If I look at the NASDAQ Composite, not so much. Pulled back to the 50 and bounced. Certainly not extended. And if I had to pick which one's more likely to go up this week, is it the momentum of the other two, or is it the reversion of the mean for this one? And then lastly, the Russell 2000 using the IWM, just sitting on the 50. And interestingly, in HGSI, you might wonder, why is there not a new buy signal when we saw it in TradeStation? If it trades up at all on Monday, you'll get it Monday. The basic calculation or algorithm's the same whether you look at Trade Navigator, TradeStation, Thinkorswim, HGSI, the different groups that has John's indicators, but they all have a little bit different formulas and their languages, and so it's not unusual to fire a day late. If I go and I look at things like biotech just remains bouncing around its 200-day moving average. Big tail on them this week, but hard to get excited about biotech. Now, ETFs like LABU, they are trading vehicles. They are not investment vehicles. If the market is going up like it did from November into February, you want to ride them long. But if they're not working, you don't hold them because it's not one news event that's going to turn it around. Right now, biotech is weak. And frankly, I got back in them here, and I'm stopped out of them. Semiconductors have been very strong, now kind of going sideways like the NASDAQ is. Look at the hammer on the weekly, though. More bullish than bearish? I would think so. Let's look at the IBD 50. Kind of reflects what a lot of our portfolios look like. just kind of sideways here. Down a little bit on the week. Let's see, is it down on the week? Actually up a little bit on the week. I guess you have to see this date here where it closed. But really going nowhere. Did have a new buy signal in, which I guess makes me feel good. How about the FANGs? We would expect them, FNGS. I'll come back to the FANGs. I guess they're not in this now. What else would I want to show you from here? Dollar, you know it's weak. It's weak. Now you're going to look at the VIX. Well, I'll show you the VIX. You can't even see the VIX, it's so low. And if you look at gold, it's going to run right into resistance here, but gold has moved up a lot, and that weak dollar is supporting it. We look at silver, it's broken out. I got a long position in ACQ, I think it is, which is a leverage short, a leverage long in silver. And gold miners are starting to look interesting as well. Broken above the 200, stronger than the metal, looks pretty good on the weekly. Next thing I like to do is look at the industry groups. Get the warehouse view here. You see I've got, well, I don't want to have that. I've got a filter on here, don't I? Yeah. Take off my filter and look at this again. 175 groups, probably means there's an index of indexes in here. If I look at 2-day up, moving to the upside, I've got 81. There it is. Let me take that one out. I don't like having an index in this. There we go. It's supposed to be, all right. Nope. So I've got 80 to the upside. Nope. I have on short-term momentum 2 to the downside, aircraft and parts, and food and drug stores, one of which had a very strong 5 days and one that was flat. If I look at 5-day up, I have 63. If I look at 5-day down, I have 35. So this is decidedly bullish. So we stick to the bullish industries and make sure I'm ranking it by raw combo. And this gives me a chance to find from a top-down perspective the leading stocks in the leading industries. Apologize, it's a little bit jumpy. I've had to take my dog out a couple times. Right-click on the top group, precious metals, and the best stocks will come up to the top. I typically don't go beyond the first couple, but since this is such a strong group and only one is better than the index, making sure I'm using raw combo. Just take a look. I own some Barrick Gold, and all right, let me make sure I got everything going right here. Yep, let me add this back. Okay, so like gold itself, closed with a bit of a doji on Friday, gapped up, so it was a very positive day, but it closed a little bit less than where it opened, coming into an area of resistance. On the weekly chart, a high closed doji, which is to me, John's best signal that he's ever created. So overall, that makes me somewhat bullish on American Barracks, or what used to be American Barracks. Tech Resources, this is one of my biggest positions, and it's broken out to multi-year highs here. It was higher in the past. Not much. Here you go. You got to go all the way back to 2018 to see that. But they've got coal, ore, and a number of different resources, and right now that's what's working. Look at the earnings per share growth. I already own this. I suspect it's going to go higher as long as the Fed lets this market and economy heat up. Newmont Mining actually looks better than American Barracks or Barrick Gold. It's broken out to a recent high. Similar candle, gapped up in some indecision at the end. And then if you want a silver play, Hecla Mining had a viable gap up on Thursday. Had some funny, traded down and then closed right where it closed the previous day. Hammer candle on Friday, but great earnings per share growth. And then Kirkland, First Majestic Gold was interesting, or First Majestic Silver. This is when the Reddit crowd went crazy on silver. I ignore that, but it looks to me like this one might be setting up as well. Of all of them, I think I like tech resources the best. But again, I'm talking my book there. Second group is communication equipment, changed index group, and there it is, Apple. Interestingly, because Apple's kind of sideways, but the reason why Apple's there is simple. Its average volume is 100 million. So if Apple closed up, it's got high force. And it was up 50 cents. So that's why Apple's there. Not that exciting. They do have an event that leaked that's coming beginning of June. It's hard for me to believe they'd have new phones. They just had new iPads. I suspect they got some new computers coming. Maybe the next version of their new Apple chip. Cisco, old name, breaking out to new highs here. Mobile breakout from a squeeze, new person buy. 2 pocket pivots, multiple kahunas. I like that pattern. Don't love the earnings per share growth. Nokia, Motorola, love the pattern. It's an expensive stock. Don't know anything about it. This is not a group that I'm very familiar with. I do like CommScope Holdings. Why? In an uptrend, kind of pull back to the 50, 2 kahunas in a row, which always gets me excited. Person buy signal, mobile breakout from a squeeze, great earnings per share growth. If it hits these numbers, it's going to go higher. CommScope, that's on my buy watch list. Third group is semiconductor devices and semi-LEDs. Don't know anything about this. I bet this is one that had a lot of volume over here. Let's see. 14 million, 159 million. When I see this is fast money, it's Reddit crowds, it's stocks that just are all over the place. It opened at 4 on the week. You got as high as 13.5 and closed at 8. Tough to make money on those plays. I stay away from them because I always seem to be getting them after the initial run, and then they close lower than what you pay for them. Not very good. NVIDIA, not done anything for a while. Pulled back here. Maybe it's setting up. Does have a bit of a hammer on the weekly. Certainly one of the titans in the semis. AMD, I'd wait till it gets above 82, which is what I told my sister-in-law. It popped up, but it came right back down. Great company, but just because it worked last year doesn't mean it's going to work this year. Great fundamentals, just not working right now. Texas Instruments, beautiful uptrend. You want to buy it off the 50, it's kind of the right time. I'd like to see it take out its chandelier trail. Earnings are not until July. Good earnings per share growth. Not a bad looking chart. NXP, same thing, but sitting on the 50, like that even more. Qualcomm, maybe, it's just not doing much. All right. Next one down are REITs. They had a strong Friday. Now, the thing about REITs is you got to know what you're buying. Regional health properties, all right? You can read about it. Long-term care and senior homes, well, we're going to need those. Doesn't pay a dividend. Normally has 5 million shares, and it traded 55 million shares. Kind of looks like that other play I showed you with the big range. Do your homework. It makes me nervous seeing this. American Towers. This is a company that owns cell towers with 5G. Probably a good place to be worldwide. Just hasn't done anything all year and only pays a 1.9% dividend. Yeah, these are big moves, but go back a year, we're kind of right in the same range we were back then. Expensive stock with not enough dividends, go sideways. Simon Property Groups. This is a department store REIT. Department stores are coming back. Look at the group strength. It's already had a big run, pays a 4.2% dividend. I'm going to flip down a couple. Weyerhaeuser. You know how lumber is very expensive? They are a lumber REIT. They own timberlands. Great earnings per share growth. Shockingly, it pays a crappy little 0.9% dividend. So there's a lot of different things within the REITs. Base metals, I think tech probably belongs in this group. I also own Freeport-McMoRan, also a big position. Look at the earnings per share growth. Look at the growth in revenue. Copper is doing well. It's under demand. It's much more fun to buy it off the 50 than to buy it in the stratosphere. I think it goes higher. I hope it does. I own it, but I'm not sure I buy new stock here. Cameco, a uranium play, it's already broken out and running. Doesn't have great fundamentals. It's more about the scarcity. Southern Copper, this might be a better buy right now than FCX. It too has great fundamentals. It too is a copper play. And notice how it's gone sideways here back since middle of March. Yet look at how its relative strength has improved, even turned positive. This looks interesting, Southern Copper. Alcoa's already run too much. There are some nice things this week, aren't there? Consumer finance, oops, did it the wrong way. Make sure I did the same thing. Right click, left click, change index group. So Square, Bitcoin play, earnings came out. Doesn't look like it did much. It's been a great story. It's got some earnings per share growth, but it has a big PE. Didn't do much after earnings. I'm not going to run out and chase it and go for it now. MoneyGram, also I think a Bitcoin play, plus a fintech, old name. Interesting belt hold candle-like appearance on Friday. 21 million shares traded versus 2 normal. Something's going on there. Not a name that I'm very well knowledgeable about. Capital One Financials, know this one well. Own some of my long-term accounts, continues just to go higher. Again, how do you buy this up here? Wait till it pulls back. Pays a teeny-weeny dividend. American Express, also doing well. I mean, the ultimate stock in this group, not that you could buy it right now, is Alley. I mean, tight, lower left, upper right-hand corner. What a beautiful stock. What a beautiful, beautiful stock. Next one down are steel raw materials providers. So iron ore, Vale. This was the opportunity to buy it. Mobile breakout from a squeeze, breakout above the 50 and the chandelier stop. Person was in a buy and pocket pivot and kahuna. Too late for me to buy it, pays a nice dividend of 4.5%. Cleveland Cliffs, not nearly as pretty, did the same thing and failed, but running again. No dividend, under demand. Look at the earnings per share growth. Rio Tinto, Turquoise Hill, big move up here. Bible Gap up on Friday, closed near the high of the day. Don't know anything about this company, except it did spike up its revenue. And then we get to the index. Number 8, Internet Media. I've got a position in Google. It popped with its earnings and really hasn't done anything since. Sounds like Amazon. Snap, now, this is an interesting one. Curate, like I said, the QVC, and I've been in and out of this. They pay some crazy dividends from time to time, special dividends. They make money. It's yield of 10.9, but that includes special dividends that don't have to be repeated. PE is almost nothing at 4.61. What a beautiful breakout candle. The problem with this one, well, it's interesting. And one of my things that didn't show much volume, probably because it wasn't Series A, big volume, level breakout from a squeeze, kahuna. I like curate retail. Facebook broke out, now going sideways. IAC. So this is what I do all day, every day. I go to the top 10 groups. I right click on it, bring in the industry group, the stocks industry, and I double click, and here's US Steel. I'm long US Steel, as I said. I'm heavy in material, energy, with some finance stocks as well. Not a very tight pattern at the high of it. You know, when I see the next doji, I'll probably get out. I look at this earnings per share growth, and I think this could keep going under demand. Nucor I also own. This one just broke out crazy this week. ArcelorMittal, Steel Dynamics, which I had and I sold way too early. It was getting a little bit too concentrated. Exploration and production. Take your pick. EOG Resources. Look at the earnings per share growth coming into these stocks. New breakout going up against a, I think that's the 1,000-day moving average. ConocoPhillips actually looks like it's breaking out, pays a 3% dividend. DOW and Energy breaking out. Look at the earnings per share growth, 3.4%. Occidental Petroleum hasn't broke out yet, but look at all these kahunas occurring down here. Mobile breakouts from a squeeze. Interesting. EQT, a fracker, broke out. Pioneer Natural Resources, running great earnings per share growth. These stocks are on fire. And I remember it wasn't that long ago when the oil traded below zero. Marathon also looks interesting here. So there's a lot of these here. A couple else that I like that showed up on a number of my scans. Murphy Oil, breaking out here. Mobile breakout from a squeeze. Kahunas, 2.5% dividend. I think they're at, are they the Walmart provider? They used to be. Diamondback looks like it's setting up. Hasn't broken out yet, but had mobile breakout from a squeeze. 1.8% dividend, very strong fundamentals. I own that one. Callon Petroleum looks like it's getting ready to break out. It's been going sideways though, so let it break out before you chase it. Good fundamentals coming in, under demand. PDC, one I used to own, pulled back to the 50. Looks like it's running again. There's a lot of stocks. Look at SM Energy, sideways move, mobile breakout from the squeeze, and a kahuna. Chandeliers below it. A lot of good looking stocks tonight. Oil gas services, let's just take a look at this one. Schlumberger starting to move. I own some Halliburton. And this one I got the way you're supposed to get long-term positions. Back in 20, when this thing was dead and it got down to $4, $5, I basically sold puts down there, or excuse me, I sold puts and I bought calls, created synthetic positions because I didn't think it was going to go any lower. And it did okay. All right, so that's the top 11 groups. So what did I do? I came up with my buy watch list. Again, for somebody that's new, here's what I do. I get home at 7 o'clock from dinner on Friday, and I run a lot of scans. These are all TradeStation scans. Okay. John Person PPS scan. All right, I run my scans. I then download watch lists from multiple different sources. We'll open this up. So I have to open it up anyways to post this on YouTube. But I'll go into Investors Business Daily and I'll download a bunch of these lists. I'll go into MarketSmith and they've got a number of screens that I look at as well as a number of lists that I download. I then have a macro that takes all those downloaded lists and pulls the symbols out. And then with a little bit of work, I create what I call my consolidated buy list, which has all the stocks that made it to my bullish or a different list, bearish list for the week. I put a price, so I have 1,483. That's a big number. I put a price and volume on it. It's actually 5 and 500,000. I get 1,000 different instruments. I then manually look at each one of those, flicky, flicky, flicky. I take the top ones I combine them with John Person's weekly HCDs, and I go into TradeStation, and I basically will look at every one of those stocks that made that list. And I do that so I can get a very well curated buy watch list. And this is what I work with during the week. Now, hold on one second. Okay, so I take my buy watch list, which I'm going to show you here. And let's just do a simple. So these are what made my buy watch list. Let's make them down by industry group. And I think you can see some themes pretty quickly. Agricultural chemicals. I already have a big position in Mosaic. It missed its earnings, but look what it did anyway. Sold off, and now it's going out setting new recent highs. Great earnings per share growth. Pays a teeny weeny dividend. That would be nice if they did better. I like Mosaic, and I still own it despite its miss. Auto parts. I'm out looking at cars now. Again, I go through cars crazily. And I want to get something that's not too over the top because I've got some over the top toys already, cars. And they're adding $7,000, $8,000, $9,000 because of market forces onto the sticker. So I'm probably not going to buy one if that's the case. Aptiv, don't know anything about this company. It has earnings per share growth. It's had some pretty profound turnaround on revenue. Look at the revenue and earnings bottom and come back. Trades plenty for my taste. Nice run up, sideways move and breaking out here. Mobile breakout from a squeeze, took out the chandelier, new person buy signal, two kahunas, and strengthening relative strength despite sideways stock. I like that a lot. There's a number of auto parts stocks. Base metals still look good. I mentioned Southern Copper. I showed you CommScope. I showed you some of the exploration and production stocks. Integrated oils, why would you look at Chevron or Exxon here? Well, one, because it's breaking out. Two, because it pays a 4.7% dividend. Exxon pays 5.6, also breaking out. Here's Curate. Now, PerkinElmer, earnings are out. Good earnings per share growth. It looks like it's breaking out here. And notice, again, sideways move and big improvement in relative strength. So PerkinElmer I like. And then I've got garbage that, when do you buy it? Quidel, is it done going down? It missed its earnings, it traded up. That's a good sign. Great earnings per share growth, teeny weeny multiple. Maybe it's time to start buying Quidel again. I've lost my shirt on it because I get married to its earnings per share growth and it keeps falling. Precious metals, Barracks, Majestics, Hecla, Tech. I saw some REITs I like. Tanger Factory Outlet. I know the ones down here in West Palm are packed. Sideways move. Looks like breakout day on, or potential breakout on Friday. Good earnings per share growth, 2% dividend. Got some specialty apparel. Bunch of steel looks good. I already got too much already. So this was my buy watch list. Now, how can I follow so many stocks? It's impossible, right? No. I stick them into programs. Like here is my buy watch list in Thinkorswim. These are the stocks that I picked. And I can look for, this is kind of like the artificial intelligence vantage point indicator. It's not. It's something that somebody made for me that's very similar. I could look at this one, which I got a long time ago, which is a short-term momentum one. I could find my kahunas, my HCDs, my pocket pivots, my Bible gap ups. I could look for divergences, daily RSIs, and then seasonality. So let's talk about one right now, Car Gurus. It's already gone a lot, but is it still ripe for the taking. All right, so there's no seasonality, which means it's too new. I kind of knew that already. If I look in Market Smith, it's been in a downtrend. I don't like that. Its relative strength is horrible. It did take out its moving average. It does make money. Okay, I made my comment about what the car dealerships are doing now and how scarce cars are, whether it's semiconductors, COVID. Let's look at it here. There must have been a reason why I liked it. And here's the reason. Big move on Friday, a Bible gap up, a mobile breakout from a squeeze and a kahuna. It does have earnings coming in. And then I also, when I looked at it in TradeStation, you go to my Q view. Actually, this is probably the best view over here. Nah, this view here. It should be in there. I don't see it. So let's go back here to Advanced Screener. Etc. CARG. Pull back. Here's your support. Looks good on daily and weekly. Breaking out of a squeeze. Laguerre RSI firing on the daily, firing on the weekly. On balance volume about to take out its moving average. JP histogram looks good. Let's look at Q. New buy signal off of support. Weekly looks good. The only thing that bothers me is it's getting into an area where you might expect resistance from some of these prior lines that draw on Sagar's Q tools. But when it's so far off of its highs, to me, it's kind of interesting. And look at all the grains on Jeffrey's dots. And it's got a new weekly bongo. I think Car Gurus looks interesting. It did run a lot on Friday. You might let it pull back some, but this was one that I liked and how I look at them. So on that note, I'm going to say goodbye. And again, in Thinkorswim, I can do market watch and be able to monitor and look for various indicator changes. And in TradeStation, it's called radar screen. And in here it's called sonar, but this is radar screen where I have all kinds of signals that I'm following during the day, pullbacks, all bullish pullbacks. On Friday, I can look for reversals, breakouts. Touch means it came and touched a moving average. Let's see, Alley touched here and it went up. Just to give me signals that might help me understand what's going on. I'm at a little bit over an hour. Happy Mother's Day to the ladies who watch. And if you're not a lady, I bet you got a lady in your family because we all started somewhere. So go give your mom a hug and we'll see you next week. I think that we could have a positive week this week, certainly on the NASDAQ. But we are in May, and I'll see you next time. Goodbye.